Welcome to the Business of Soil Health. I'm your host, Patrick Smith, and the founder of Soil Upside. I'm really happy to have Mitchell Hora with us here today. He's the founder and the CEO of Continuum Ag. Hey, Mitchell.
Hey, thanks for having me here, Pat. I'm excited. Lots for us to dig into, I think, here.
Yeah, absolutely. Let's start with a little bit of context. How did you initially get to regenerative ag? Like, what brought you into soil health?
Well, I was born and my first word was corn. So,
are you serious?
Yeah.
I didn't know that. That's very funny.
Yeah. So, but no, I'm seventh generation on my family's farm in Southeast Iowa. My first word actually was corn, which is crazy.
That is hilarious.
But I'm seventh generation. So just been born into it my whole life. My family farm is about 700 acres. Is my parents' farm and mine. And then a lot of my rest of my family farms as well. But being seventh generation, I mean, I've just grown up with it, right? This is just what we do. My family's been farming in Iowa for 150 years. And in order to farm for 150 years, you got to be focused on sustainability of soils, but of economics too. It's got to be economically sustainable, number one. And a lot of farmers have been able to be economically sustainable, but we're really trying to drive it with soil health and be, more resilient in our system. And, but my family's always been pretty up on that as well. My family first started using no-till in 1978. We've been 100% never till ahead of soybeans since 1986.
It's cool.
And now been big into the cover crops and stuff since 2013. Diversifying our cropping system, growing a lot of cereal rye rather than just corn and soybeans. We've also experimented with wheat, barley, mustard, open pollinated corn, lots of different stuff. But for the most part, I mean, we're in Iowa, conventionally farming, but just trying to do it with lower inputs and building up soil health along the way.
And what's your involvement been in some of those decisions, like the decision to start doing cover cropping?
A lot of that at the beginning, Dad was the one that was doing it. So 2013, I would have been at Iowa State at the time. 2015, 2016, we really started pushing on it. So Dad was doing this stuff because there was some cost share money there, right? There was the Iowa cover crop cost share program, really prompted by water quality issues and the Iowa nutrient reduction strategy. So there was some money available, maybe $15 an acre. It might have been still $25 an acre at that time. So $25 an acre in year one, then you can earn $15 an acre after that to plant a cover crop. But I was at school and Dad didn't end up applying the cover crop the way that we really should have, the way that we do it today. And it actually screwed us up and hurt the corn, hurt the yield, just didn't have good advice. And this was early in all this cover crop stuff. The resources were not readily available. And it was just still very much a foo-foo, like nobody's doing this kind of thing back, 10 years ago. At that point, I was getting my company started up though, and was able to do a lot of soil testing in that trial and looking at what was going wrong with soil health with our biological communities, doing the Haney soil health test. And we were able to identify multiple components of where we screwed up, but we had data to back things up. We had data for us to be able to then learn from. And now we're, of course, having success at scale. And Continuum Ag was born out of that on-farm failure to really make sure that other family farms didn't go backwards when looking at adopting these new sustainability practices. And especially as this looks to really rapidly scale, we've got to make sure that the technical support is readily available. We're just trying to help scale that with data and now, of course, adding on some additional financial outcomes on top of just the data and just the technical support. But things have progressed a long, long way since getting the company started. But it all boils back to make sure that farmers know how to logistically and economically adopt these practices.
So did you guys start doing field trials?
Yeah.
Was that cost share on small acres?
You bet. So that first year, it was like $25 an acre. And Dad did it on like 100 acres, right? Nothing that big. We had trials, and in the trial, we lost about 20 bushel the acre. Okay, a big hit. Especially, today we're talking.
So that's what, 10%?
About 10%.
Yeah.
20, yeah, it'd been a little bit, not quite 10% in that year, but still a big hit nonetheless.
Yep.
If we would have cover crop the whole thing, we would have been like, oh, this is amazing. No, we were good because even where we had the cover crop, it yielded 245 bushel the acre. And if the whole farm would have been 245, it would have been our best yield ever at the time. But the problem was the normal no-till program that didn't have the cover crop, it yielded 265.
Yep.
It was amazing. So we were able to directly see side by side. The corn just looked like crap too. I've got some pictures of it and stuff, just nasty. But a lot of farmers run into those issues where we're planting corn, that's a grass, into a cover crop, namely cereal rye, which is used more than 90% of the time across the Midwest. But cereal rye, also a grass, so they are in competition to each other. And we got what's known as the carbon penalty, where we had too much carbon biomass out there, tried planting corn into it, and just screwed things up. But we've learned from that mistake, and we avoid all that here now. And like I said, having big success with it here as we've progressed and learned from it, and now try to help other farmers make sure that they don't have to learn the hard way like we did.
So you had the yield hit, and then it sounds like you were still really curious about figuring out what was going on.
Yeah.
I'm assuming your dad was too. You guys stuck with it.
Yeah.
And what did you do in the next planting season different?
Yeah. Yeah. So I think that's one of the key things, especially for the talk here, right? That plenty of farmers are going to be looking at changing practices because there's a lot of money being dangled out there. And some of it's, most of it's short-term money, right? But if you take $20 in a handout, right? Or like this cost share thing was like $25 an acre, but you lose more than $100 an acre.
Yep.
Like, well, we might end up doing more harm than good
exactly,
in some of these programs. So what we learned luckily, I mean, I was getting Continuum Ag going right at that time. We were able to do some soil testing to learn that it was our fault, right? It wasn't the cover crop's fault. It was our fault. We didn't know what the heck we were doing. Our soil health was not ready for it, meaning our biological activity was not great. We had been no-tilling, but we were conventionally farming, right? With plenty of pesticides and plenty of synthetic fertilizer. And just no-till alone doesn't get you where you need to go. And we were still doing a little bit of tillage, before this point. It wasn't 100% never till. So our soil health just wasn't that great. We didn't have the biological activity, and we definitely didn't have the organic, stable nitrogen built up out there. So that's where we got the penalty, but able to utilize data and learn from that. What we did in the years after that was, instead of using really heavy rates of cereal rye ahead of corn, we experimented with things that are easier, like winter wheat ahead of corn. A lot easier to kill, doesn't grow as fast, doesn't tie up as much nutrient, doesn't impede the corn crop as much. So that was a big win. Also, we really focused on aggressive cover crops ahead of soybeans. Cover crops like cereal rye ahead of soybeans is much easier than big grass cover crop ahead of corn. Now today, we are back to exactly what we did in year one, using cereal rye ahead of corn, letting it get fairly good size, letting this cereal rye in a lot of cases get 15 to 24 inches tall, even ahead of cereal rye, even ahead of corn. We plant green, which the universities say don't do. But because we understand carbon and nitrogen, because we understand biology, because we now have our planters set up the right way, our fertilizer program, our pesticide program, we've changed our system to revolve around this cover crop. And the cover crop is part of the program that now we're able to have huge success with it and have decreased our need for fertilizer and pesticides significantly. We've reduced fertilizer by about 50%. We've reduced our pesticides by about 75%. We've reduced our need for federal crop insurance, for any farm subsidies, for any replant. We haven't had any replant in years. We haven't had any crop insurance claims in years. We're just so much more resilient. But it did take a little bit of time to get there. Now, one of my takeaways though is I am amazed at how quickly we can build soil health. You don't have to lose money in year one. Now, it might take some off-farm money to offset the cost and to maintain and to break even in those first couple of years. But you can absolutely be money ahead very, very soon into this journey, as long as you don't screw it up like we did. And that's why the technical support is just so critical. And that's why I really worry about how fast this is going. And I know that regulation is the wrong way to do it because the technical support is not readily available at scale. The logistical support not ready at scale, namely cover crop seed, the ability to apply all these cover crops, the labor to get it all done. Like those infrastructure components don't exist today. They've progressed a long way, but like it takes time to let that stuff really get going and let supply and demand just fuel it. But overall, I mean, things are moving in a great direction. A lot of people know about these kind of soil health practices, and a lot of people coming on board with them too.
So it sounds like it's not a direct line to net profit increase. You had experimentation along the way.
Yeah.
And one of the most fascinating things that I think you're pointing out here, just to highlight it, is that, yeah, we can get capital to growers, but that has to be done hand in hand with technical assistance. Mm-hmm. And it's not just TA generally. It's like technical assistance where folks know this in detail.
Correct.
So how do we do both of those at the same time?
Yeah. Yeah, I think that's a good point where the money, it's how we got into it, right? There was some money being dangled out there.
Yep.
And we said, okay, sure, we're looking at this stuff. We'll try it small scale and take the $25 an acre. But the technical support that was provided was from the government, right? And still, most of the time it is.
Yep.
Government folks or it's university folks, and they do not necessarily have the real boots on the ground experience. They have not had to put their own money on the line to figure this stuff out. They've not done it at scale. Like the real technical assistance needs to happen farmer to farmer. That's how farmers learn best anyway. And that's becoming more readily available. I think social media has helped with that. There's a gazillion different field days and events and what social media connecting people to really tell their story and learn from each other. But we've got to make sure that it's that farmer to farmer technical assistance that is really bolstered up. And I think there is a disconnect on that there's a lot of money in this space from different cost share programs, the climate smart commodity grants, different carbon programs, a lot of money out there. But a lot of those programs then they're aimed at putting more technical support in place with folks from these companies or folks from the government or folks from commodity organizations or universities. And those people are great. Like we got to have some of that, but it's missing the boat where really what we need to do is bolster up the farmer to farmer learning and the people that are actually doing the stuff, have actually been there, done that. Those are the people that should be better compensated to actually provide the support to the farmers. Some of that effort is going on. Some of the programs do a good job of including early adopter farmers and including, farmer mentors and such. But I think a huge gap there that we continue to miss the boat on.
Yeah, it's almost like all of the trusted advisor network is also coming up to speed on this change at the same time.
Yeah.
And so tell me about Continuum and the role that Continuum, like when you initially founded it, that Continuum would play in this ecosystem and transition.
Yeah. Originally Continuum was aimed to kind of fill that gap. And
exactly.
To scale the agronomic support. I've got degrees in agronomy and in ag systems technology. Started bringing that soil health data to the table with the Haney test. Then we were building some software around the Haney test to allow for, again, additional scale and building out a SaaS platform where other agronomists could also utilize that software to make recommendations. Today, we put an additional number on those scores and on the farming practices, on the recommendations, and that score is a carbon intensity score. And carbon intensity scores basically put a metric on these farming practices, a carbon outcome based on the practices. So we're showing farmers, here's your carbon intensity score today with your current practices. And as you look to change practices, here's how it would change your CI score. And that's important because that score is coming from the Department of Energy and being utilized to generate tax credits, specifically with Section 45Z of the Inflation Reduction Act. It's a clean biofuel production tax credit. So for crop that's being utilized to produce renewable biofuels, that carbon intensity score is utilized directly to be able to generate these tax credits. So we Continuum Ag today, we're about 36 employees, about 4,000 farmers in the system, well over 4 million acres in the platform right now, across 43 states, 23 countries. It's just been wild. But started off with just my original intent was to do consulting and soil sampling here in small town Iowa. farm with mom and dad, and I bought a farm in 2017 and die. That was the plan. At least how I joke about it. Consult, farm, die. That was the plan. But now it's just progressed so much. This space has really taken off. The CI thing is just massive. Been able to raise a little bit of venture capital to build some software and to scale faster. And we're about 36 employees here today, and continuing to add all the time just to continue to help our farmers and really help our dealer network and help our friends in the biofuel space as they get ready for these tax credits, while at the same time exploring non-biofuel markets as well. That's where I'm bullish on this in the future. As everybody looks to be more sustainable, looks to decarbonize, whatever kind of outcomes they want, agriculture is part of like every single supply chain. So you've got to factor that in as part of your scope 3 reporting. And we're just making sure that farmers have that data readily available and helping farmers to legitimize it via a third-party verification program.
So let's unpack this a little bit. So going back to when you founded Continuum, it was really to help scale out the agronomic technical assistance and make that broadly available with some software tools to help you scale that service.
Yeah, but I started Continuum Ag in 2015. We didn't launch the software until 2020. We started building some stuff, I think late 2018, throughout 2019. We were doing it internal, but we didn't launch it publicly until 2020. So it was a lot of pencil and paper at the beginning. It was a lot of phone calls and emails and sitting down with farmers and hand-to-hand consulting is really what it was.
Yeah, you were a services firm at that point.
Yeah, we were services. We were 100% services. It had nothing to do with tech. It was not an investable company. We didn't take on investment until late 2019, early 2020. Again, as we were launching the software and able to make that initial switch anyway from pure service into a little bit more on the SaaS.
And did you see with your clients, the growers that you were working with, did you see that same parallel of economics and technical assistance going hand in hand?
Yeah, it's what I've said from the very beginning. In order to help farmers adopt these regenerative ag practices, especially cover cropping and no-tilling and implementing more diversity, the biggest two concerns always boil down to logistics. How do I do it? How do I change? How do I make my equipment work? How do I work within my labor? How do I make this work for my soils? It's logistics and it's economics. How do I not lose yield and lose money? This stuff costs money. How do I cover that cost? And how do I justify spending the money? And as you think of it as a long-term return, long time to get real return on investment, as farmers, most of them are operating under a 1-year operating note and 1-year rental agreements and such. How do you look to invest long-term when you're living in an annual financial cycle? So, but
really narrow margin of error there.
Really, really narrow margin. And, luckily on our farm, that initial 20 bushel yield hit that we took, luckily it was small scale and on 100 acres, not on the whole thing. And most farmers do start, with relatively small scale, call it 10% of their farm. Then they scale it to 50% of the farm. Then they can scale it to 100. It usually is a couple year process. And again, that's why, we do have to, although it is slower than mandates and regulations stuff, we do just gotta let this continue to progress. It is better. Like people are going to do these practices like no-tilling and cover cropping and stuff because it actually is better. It actually does make you more profitable. It actually does make you more resilient. It actually is really good for soil health and for water quality and for the environment and all that. It actually is better and more profitable, but it just, a lot of farmers, what they're doing today works fine and they're able to pay the bills and it's what they've always done. So changing a paradigm just takes time, but more and more of them are seeing that, okay, this actually is better. And they know that the puck is going this way, the consumer policy, it's all going more this regenerative direction. So a lot of farmers are catching on to that and the change is starting to really speed up and happen faster.
You use the magic Y word, yield, and profitability. And I think many times those are equated, but obviously those are two different things.
Yep.
So I'm curious in your experience and in your conversation with other producers, to what extent do producers start to think about ROI separately from yield, or are they still sort of joined?
Yeah, very, very tightly joined. Yeah. I mean, by and large today, the revenue coming in, right? The income side of the equation is directly driven by yield. I don't get paid based on how I produce my crop. I get paid based on how many bushels I produce. Now, with the CI thing, I think it's the very first time that there's a new scoreboard for agriculture. The scoreboard has always been the yield monitor. The point system's always been the bushel. The financial system's always been getting paid a commodity price by the bushel. And therefore, you got to have volume. And we have the yield monitor, the scoreboard, and we could see what is scoring the most points and
On
that's
every
what's
pass.
driven on every pass. That's what drives the decisions. Well, now for the first time, we've created a new scoreboard with our topsoil tool. The scoring mechanism is carbon intensity in the GREET model, and with 45Z coming through, there's finally a new scoring mechanism where farmers can earn points directly and earn financials directed for the points that they've created. And the lower the carbon intensity score, the more financial reward you can garner. It still is attached to yield. Yield is going to remain important, and we do still have to have productivity. We have to have productivity. You can't just, we can't sacrifice productivity, but there's a balance to it, of course. And I think now, especially with there being more to the overall financial system than only the bushel, I think we're going to see some real change happen a lot faster. And farmers becoming more aware that we've got to focus on bottom line profitability. But by and large, they're looking at the more bushels that I can harvest, the more the top line revenue is, because for the most part, they're looking at just pay down the operating line to be able to farm again next year, continue to work down and pay off the land, right? Pay off some of those fixed expenses to be able to improve margin that way. And over time, do create a little bit of margin, a little bit of profitability based on over time owning stuff and, depreciating off other assets and stuff too. But being able to create that margin over time. But now I think, the paradigm's going to shift here a little bit, that there's that new scoreboard and new opportunity to create some financial upside.
Before we dig into the weeds on carbon intensity, because I know you're chafing at the bit to do that, let's talk a little bit about transition finance and getting over the hump of the initial investment into doing these practices and equipment and cover crop seeds and the other, maybe some infrastructure pieces. What are you finding that's most effective for growers? And in your experience, are most growers self-financing that? Are there cost share programs that they're leaning into? Like, what's the transition finance landscape look like to you?
Yeah, I mean, I think there's a lot of room for figuring out more options. And I think that's really what it boils down to, is it's just options for easier, financing options out there, probably in terms mostly of low interest loans, or maybe some, longer term payback of stuff, or some different cost sharing kind of things. For the most part, when farmers are looking to transition, they try to work within their existing equipment, right? So they try to first utilize, what equipment do I already have? Say it's a drill. Okay. If I'm going to plant a cover crop, I'll just use the drill that I already have to plant the cover crop, and then utilize that drill to plant my soybeans in the spring. So being resourceful that way, rather than try to buy an air seeder or a new piece of equipment to go and plant the cover crop. A lot of farmers, if they don't have the cover crop, then they'll hire it done, hire an airplane or somebody else to custom apply it. But there's a gap in that we need more people that can custom apply. We need more of this equipment to actually apply the cover crop correctly, especially when it comes to drills, air seeders, the actual application equipment. So there's a need for finance in there. And I could see it being not just for farmers, but also for other, young entrepreneurs and stuff, who they might want to be the one who gets the tractor and gets the air seeder, and they can custom be hired to go and apply the cover crop.
Lease the drone.
Definitely an opportunity there. Maybe drones as well.
Yep.
But so there's that. Most farmers, though, they're just working with their banker and trying to work within their existing operating line, or buying pieces of equipment, financing it through the dealership and stuff. Plenty of farmers will sell the tillage equipment or sell existing equipment that they don't necessarily want anymore, and utilize that cash to go and buy the drill or buy an air seeder or buy a piece of equipment to utilize to go down this soil health route. But by and large, though, most farmers are being resourceful, utilize what they already have or hire it custom done. But I do think that there could be an opportunity there for just easier financing for some of that equipment or shared equipment, or just making it easier for people who do want to make that switch. Just, a big example there would be folks that are looking to strip till. A strip till rig, I mean, you could be talking $150,000, $200,000, $225,000 for a strip till rig. Like, if you're going from conventional tillage, which farmers would already have that equipment, and then trying to switch to a very expensive piece of equipment, a typical, disc gripper that might, after being used for a while, I don't know, that's probably going to be worth in the realm of more like $20,000 to $60,000 for that piece of tillage equipment. Well, if you're selling a $20,000 to $60,000 piece of tillage equipment, you don't have enough equity built up to roll that into a strip till rig equipment for call it $200,000. So there's definitely a gap in some of those pieces like strip till. That comes up a lot. That strip till could absolutely be something that could be utilized at a much, much larger scale, but the cost of that piece of equipment being pretty significant. A drill, a cover crop, or a cover crop drill, or a drill to plant soybean stuff, those would be more in the realm of, you can get those for $60,000 to $100,000 or $120,000. So call it half the cost of a piece of equipment for strip till. So, but yeah, some of that capital can be a big initial expense. So some more creative financing there, I think, would be a good thing to be able to spread that cost out.
And is that a deterrent?
Most farmers just use different cost share programs though too. Cost share to pay for the cover crop seed, or cost share to pay for some of those basic practices that they'd be looking to change.
Do you find the lack of financing is a deterrent for folks to try it?
I'm sure for some, right? Most of the time it doesn't come up that much. And for the most part, some of these different cost share things, it's like, the little bit of financing that is there, it doesn't get people over the hump. I think the folks that were at that kind of early adopter spot, they found the financing to make it work, and they got creative and they stacked cost share with, okay, I'm my banker, my operating line, I'm going to be able to make this work. But it's some of those later adopters that might be making larger changes, or might be looking at, being not as, agreeable to make that jump, that now having larger financing available or larger rewards, that's going to be more enticing to get them to change. I do think with so many of these programs, though, I mean, farmers can go and still buy a piece of equipment. They could go buy that strip till rig and finance it through the dealership. Like, that's how most of it's done. A lot of it, you finance it through the dealership, not even necessarily with your banker. Or you finance the down payment with the bank, and then you finance the rest of the equipment with the dealership. Very common. So, plenty of that's there, but I think being able to have that little bit of extra reason for why get that strip till rig, or why get that drill to plant cover crop, that's where I'm seeing now the offtake opportunities emerging, such that now it encourages people to actually make some of those bigger jumps and maybe look at accessing some of this equipment. That would then bring more folks to the table looking at creative financing to be able to buy those capital expenditures.
Yeah, it's fascinating. So are you seeing consistently that there's a payback period, for that initial investment, and that investing in soil health does pay off with higher profitability, higher yield,
but that takes
higher
a
resilience,
time, right? Yeah. So for example, our yields and stuff, we've definitely stabilized, definitely gotten better. But, yields overall have gotten better though too, so, but the reduction in fertilizer, we've been able to cut a lot, which we're lucky for because of how expensive fertilizer
the last couple of years.
Multiple years. That definitely adds up. For the most part, we've kind of diversified where we've put the fertilizer costs, that we're going into more micronutrients or biologicals or different sugars and humics and things like that to improve the quality of the crop. So there's some of those things. We've kind of shuffled the money around to an extent here too. But no, I think, over time, as you're getting a return of, call it improving your profitability by 10, 20, 40, $50 an acre, over time that adds up. But, to offset that initial expense and kind of breaking even for the first couple of years, it does, we're still talking 5, 10, 15 years for real financial returns on a lot of these type of practices and stuff. But it can go fast, but it just depends on how aggressive you want to be and how big of a swing you're making. But it also takes making sure that your soil is ready for it, because it doesn't just happen overnight. So you can definitely be more profitable, but it just takes being able to be smart about the data to be able to get there though too.
Yeah, totally. Let's get into carbon intensity. I know that you're really sorry to hear me say that.
My favorite thing.
And it does pair directly with what you just said about offtake agreements. And it seems to me like the most effective transition vehicle in all of this is to stimulate new markets. And so tell me at the highest level, like, why are you so enthusiastic about carbon intensity?
Yeah. To that point, right, we've had it wasn't always called NRCS, but the Soil Conservation Service, NRCS, Farm Bill, some of these conservation programs in Title II. We've had this stuff for a long time, right? These things are not new. Farmers know about cover crops. Farmers know about no-till. There's money out there. And still, like, the adoption, it's picking up, but still, like, not that aggressively picking up. The climate smart dollars sounds like a lot, $3 billion in climate smart grants, but by the time you spread that over 5 years, and by the time it gets whittled down, and the red tape and stuff, like, it's going to move the needle some, but not like change the whole game. That's why I like carbon intensity. Carbon intensity is a biofuel production tax credit. And corn, for example, like more than 1/3 of the U.S. corn crop goes into biofuel every year, goes into ethanol. So now we're talking about 1/3 of the U.S. corn crop. So what, representing, call it 30 million acres, huge chunk of land. All of those bushels have a carbon intensity score on them already. It's given to us by the Department of Energy on a county default basis. But now farmers have the opportunity to update their score and prove that their score is better through a verification program and earn a premium based on the low carbon score. So, for example, at Continuum Ag, since launching our billion bushel challenge in December, and as we're recording this today, we're at about 215 million bushels of corn scored.
That's awesome.
We got a long way to
Congratulations.
go. Thanks. We our target's a billion, right? Billion bushels. I think we're going to end up doing significantly more than that. It's crazy because a billion seemed like a lot. We're going to end up doing more, but about 5.4 billion bushels goes into ethanol every year. Okay, so we're looking at 20% market share on those bushels, and we're about a quarter of the way there right now. So the average score of those bushels so far is 11.0. The default number for most counties is 29 to 30. So we're talking about our average farmer having a carbon footprint about 2/3 lower than the default.
And do you think there's a self-selecting piece there? The growers that are opting in for you?
A little bit. Yep. I am seeing over time, our average go up slightly. It used to be like 10.3 or something like that. And now it's gone up a little bit to now being 11.0. So yeah, most of our farmers that were our initial followers, they're the soil health guys, right? That definitely would have those lower scores. And we're just getting spread out further. We're getting to more expanse of the network and such. But still, 215 million bushels is, I would assume, pretty good statistical size, and seeing an average score of 11. So the delta between, call it 30 and 10, right, for easy math, a 20-point reduction with the inflation, with the 45Z tax credit, conservatively, that would be worth up to about $1.08 a bushel. So call it
that's total, right?
Total. That's
total to the ethanol producers.
You bet. Total to the ethanol producers.
Yep.
So if you're getting, call it $1 a bushel on 200 bushel corn, that's $200 an acre and financial incentive to be shared amongst biofuel producers generating the credit and farmers and other players in the space. Say that it ends up being a 50-50 split, right? So the average farmer today with the score of 11, earning half of that, call it $200 an acre, potential for $100 an acre. I mean, some of these cost share program, like the cost share program that we did that I mentioned, that was $25 an acre to plant cover crop. Now we're talking the average farmer just doing, so to have a score of 11, you might not be doing cover crops, but you're probably doing a reduced tillage program. You're probably really managing your fertilizer better, getting good yield, like you're kind of in the middle. On my farm, my score is negative 4.1 because I'm doing no-till and cover crops. And I've reduced my fertilizer and all these things. So, but a lot of farmers have scores better than mine at negative 4. I've seen a lot of farmers in the negative 20s. But again, average score being 11.
That's amazing.
So just farmers, what they're doing today could create substantial economic value, call it $200 an acre of economic value to be shared. Farmers that have scores like mine of negative 4 with 212 bushel corn in my local nuances with my ethanol plant, we could team together to create an economic value of about $406 an acre based on my score. $406 an acre. As we look to split up that pie, I mean, and that's in tax credits, not necessarily direct government expenditure. That ethanol plant is not getting a check from the IRS or from the USDA. Instead, they're generating a tax credit that they could go sell on the secondary market to a different taxpayer and bring cash to our rural community, and some of that cash being shared with the farmer, for going and doing these regenerative practices.
So you've been meeting with a bunch of ethanol producers.
Yeah, over 100 of them.
Amazing.
Yeah.
That's a lot of miles on your truck.
Yeah.
What's the general consensus in terms of the split with growers? Because there's also a bunch of investments that they need to make internally to reduce their own CI scores, right?
Yep, they can. So they could stack those, right? So if they're making their own investment, they shouldn't share that with the farmer. They put up the money, they did the work. Maybe the farmer gets some ancillary benefit later. The shareholders will definitely get some benefit if it's a farmer-owned, a co-op structure. But no, I mean, pretty good response on, okay, if a farmer's verified, right? The only way you're going to get anywhere close to a 50-50 type split is if the farmer's got verified bushels. The data legitimacy is what creates value. If you don't have data, if you're just filling out a little survey, you're going to get what the pilot projects you're doing today, which is pay the farmer 2 cents or 5 cents a bushel. Nothing. If you want to be earning 50 cents, 75 cents, 90 cents a bushel, be anywhere close to that range, you got to prove that what you're doing is legit. And that's what we do with Continuum Ag, right? That's where we're helping. The farmer pays a couple bucks an acre. We help them to get that data organized, get it verified so that they can maximize a potential payment. And the reason why the financials are better is that biofuel producer who's buying the corn and buying the data, now they know that the liability is reduced for them. They are more bankable because what they're buying is legit. It's already been verified. They can go sell those tax credits. And when the tax credit buyer wants to pass the liability back to the ethanol plant, they know that they're sitting good because the bushels that they bought are legit. They've already gone through verification. They're good to go. The T's have been crossed, I's have been dotted. So, but some serious financial opportunity here with these tax credits. And, as we're looking at the biofuel space being about 16 billion gallons a year is the current ethanol production in the U.S., the tax credit opportunity here is up to $1 a gallon. We're talking huge financial opportunity here, and that's just within corn ethanol. But what I'm so bullish on here is the impact that this is going to make in non-biofuel markets, because they're going to have to respond. Most of my corn today goes to feed pigs, but there's no tax credits for low carbon pigs, even though 65% of the carbon footprint of the pork industry comes from the scope 3, the feed. Yep. So if the pork industry is going to decarbonize, they've got to address their biggest component of their carbon footprint, which is the grain, the feed. But if the low carbon feed is going to ethanol, they're going to be stuck with the high carbon stuff being even a worse situation.
there's going to be some real shifts in terms of the rural ecosystems and markets there. So when you're traveling around talking to the ethanol manufacturers, the ethanol producers, biofuel producers more generally, it sounds like 50-50 split on the corn side is realistic.
Yeah, I mean, nobody's definitively said anything yet. 50-50 to me seems fair. The farmer's got a lot of expense in this. The ethanol company's got a lot of expense in this. The ethanol company can't maximize the credit without the farmer. The farmer can't get any type of credit at all without the biofuel plant. So we've got to share together. And from what I'm seeing is if the farmers get their fair share and there's some openness, some transparency, and some camaraderie on this, farmers are ready to come to the table. I mean, last week alone, we scored 30 million bushels of corn last week that have been added to our system. We're getting hundreds of farmers a week coming in. And I think last week we spent like maybe $1,500 on marketing. Like,
it's amazing.
So like amazing that, and now we're doing a lot of speaking. We've got our dealer network. We've got a lot of momentum and build up, right? But still, like, farmers are really excited about this. They're coming to the table. They want to help. They want to show that they're doing a good job already. And, but they're going to have to be compensated, at least an equitable share. Like, this is just an amazing opportunity for biofuel and farmers to work together and to tap into these dollars working together. It's not farmers versus biofuel and I want this percentage and I want this. No, like, it's going to depend on what's the legitimacy of the data. If you don't have data, you're not going to get nothing. Like, if I'm an ethanol plant, if you don't have any data, what am I buying? You don't have the value to sell to me because I've got to sell this credit to a very sophisticated buyer. And they're looking at the legitimacy of the data, and I can't take on the risk that it wasn't legit. So therefore, I've got to pay to buy legit data to create legit tax credits to avoid liability and fraud.
And it seems like this is one of the most powerful things about carbon intensity is comparing it to carbon credits, generally, offset credits. And I mean, legitimacy is obviously a big part of the question on the voluntary carbon credits right now. But I'm curious if you can compare sort of more broadly why you're much more excited about carbon intensity than you are offset or even inset.
Yeah,
I guess offset specifically, yeah.
On the offset specifically, insets I'm okay with. We did an inset project last year. They're a little better, but I'll explain that one too. So offsets, multiple major issues when it comes to agriculture, and that's why there's less than 3% farmer participation in carbon offset programs, okay? Although there's 93% awareness. That data is from Farm Journal, Trust and Food. But the multiple things, additionality is a big one that deters the early adopters. You have to have practice change, and the main people that would be doing these programs, they are therefore disqualified, like my farm. The main people that are actually decarbonizing the world, they don't even qualify. So,
folks that have made significant investments in this over time don't qualify for the carbon markets.
Just because that definition of that, which really is super egotistical, in my opinion, in the carbon space. So like, oh, farmer, you're making this change because here's our little $10 handout. It's like, screw you. Like, no, like, it's just like, I could go down that rabbit hole, but
it's rooted in the precedent in forestry projects, which is so much much simpler to manage.
Much simpler. I understand. I totally understand why it is the way that it is. I actually was on the working group with the Climate Action Reserve. And I was there when we wrote the soil protocol for Climate Action Reserve. Like, I saw how the sausage is made, and therefore I know we took those rules from forestry and from other stuff. We copied and pasted and said, this is what we're going to have to do for ag. And it just doesn't work that way. So anyway, additionality, the long-term contracts, the bare minimum payment. I mean, the payment doesn't even cover the cost of data collection, which is about $20 an acre. But let alone the cost of the practices or doing any of this stuff, or the headache, or the drag in the payments and cost of capital and all that. Like, it's just not worth it. Carbon insetting, and then the long-term contracts, like, no freaking way. On my farm, I won't even lock into anything for 1 year in the future, let alone 10 years. No way. Not a chance.
Particularly when the market is changing as rapidly as it is around this stuff.
Not a chance. Can't do it. Way too risky to lock in for long-term deals. So
you're talking specifically about permanence requirements. So we got additionality and permanence.
But a lot of these contracts, right? If you go into some of these carbon credit program or some of these different sustainability programs, they're usually you're locked in for 3 years, 5 years, 10 years in these in these programs. I just can't. It's too risky.
Yeah, it's unrealistic.
It's changing. Things are changing way too fast to be locked in when we don't know with 100% certainty what is the right program, what's the right thing to be locked into. So just too risky, not enough money. Juice isn't worth the squeeze. Plenty of people don't even qualify because of some of these rules that don't necessarily work for agriculture. In agriculture, you don't have one-time practice change. Every year, our footprint's different. It literally doesn't make sense. But what I like on insetting is a little bit more flexibility, right? A little bit more flexibility, sometimes a little bit better money, a little bit more flexibility for early adopters, and not as much rigor when it comes to some of these definitions. So that's been good. But I love carbon intensity because there's no contracts. There's no rules coming from these registries. It's simply, here's your bushels you produced that year. What were the practices that went into those bushels? That goes into the carbon intensity score from the GREET model. And when you sell the bushels, you sell the score, and now it's part of the next person's score. That those bushels are part of their scope 3 carbon footprint. And my data goes with those bushels. They're able to update their reports. Done deal. No contracts, no nothing. I get paid upon delivery, and I have full flexibility, at least in Continuum's program, right? And our program is that the farmer pays for the cost of the verification and all the data and all the work that we're providing for them. The farmer pays $5 an acre, but then they own where they want to sell their bushels and where they want to sell their data. They're not locked in with somebody. They're not locked in for a long time. And say that the program doesn't happen, right? We still don't know all the rules on 45Z, or say their ethanol plant doesn't qualify, or whatever it may be. There's still these other programs, because they're still going to have all their data and still have full ownership and access to all that data that they can then do what they want, and will help them to go to plan B. So it's just so much better. And real money, level playing field where all farmers can participate, at least those in biofuel, and in transparent, simple rules.
Yeah, it makes a lot of sense. What do you think the impact is going to be on the MRV, the monitoring, reporting, and verification layer? Because so much of that has been focused on carbon, first of all, carbon sequestration mostly, as opposed to what we're talking about with carbon intensity is mostly avoidance. So I'm curious how you see the MRV piece playing out in soil carbon.
Yeah, in the short term, it really doesn't, right? In the short term, we don't need the soil sampling. We're just using the GREET model, and that's it. So it's a lot easier. And again, part of as you're looking at carbon credits, the pie is small, and you've got to share pieces of the pie with a lot of different groups. In CI, there's only a couple people that are really needed. You got a farmer, you got a verifier, you got an ethanol plant, and you got a simple MMRV tool like ours to just quantify the data and get it pushed.
It's a data platform. It's not so much the MRV.
No, it's just the measuring, right? We're measuring, we're reporting it on, we're helping with the verification, but we don't have to directly do soil sampling or remote
That's
sensing.
Interesting. Yeah, I hadn't thought about you guys as an MRV platform, but in this context, it does make sense.
I think we still are. Yeah, I still put us in the bucket of that MRV.
That's fascinating. Yeah.
Even though it is different, than how we think about it in carbon offsets, but where I think some of those groups do fit in, right? The folks that were doing SOC measurement and all that, or doing remote sensing for verification purposes. Verification, they still tie in, but also we're going to need to update these models in time. We're going to need better data to improve these calculations and to improve the accuracy. So I think there's still a role for plenty of these MRV folks to help to improve the accuracy of these models, help to bring more data to the table. But it's just, I don't know who would pay for it, right? It's going to end up having to be government agencies or different outside money coming in to pay for it. There are bills like the GREET Act, which would put some investment into improving the model. I know that they do research plots and stuff already. So there's probably opportunity like that for existing MRV folks. Because again, we do need to improve the accuracy, especially as we look at developing this GREET model or systems like it to go beyond biofuel and beyond row crop and beyond the Midwest. Absolutely going to need to improve these models, combine different models together. And the MRV folks, I think, have a key role to play to bring more data to the table.
It makes sense. And it's also interesting because then when you're talking about soil sampling, it becomes agronomically focused and internally focused on the farm for the grower's use versus we're going to take all these soil samples on farm and then we're going to share them with somebody and we're not going to use them at all.
Yeah.
Yeah.
And on ours, I mean, we've been involved in that soil sampling space and in some of the SOC measurement for a long time. And we still can add some of that on when we're doing CI, but I mean, especially when we're looking at just the dry combustion organic carbon and bulk density and SOC numbers, like what's a farmer can't do anything with that data. Like,
yeah, exactly.
So, I mean, we've always focused just on the Haney soil health test and actionable data that can actually help the farm drive decision making. Okay, if we've got to do SOC or some of those measurements, we can do that because we're out there anyway, but the farmer can't use it for decision making.
Yep.
But if we could utilize that data to improve the models, that's a good opportunity.
Totally. Mitchell, I think one of the most amazing things about what you're doing is that because you're aggregating commitments around this and because you're scoring bushels already, it puts you in a position of negotiating on behalf of growers. And that's I think really stimulating these partnerships as opposed to regulations being pushed down to growers. So I just want to say I just really appreciate that role that you guys are playing. I mean, it's really critical.
Thanks. And I didn't really know what our spot was going to be at the beginning, right? We've had to continue to evolve. And I think we're still like very much in the middle of that evolution. But I think you're right. You know, I've talked with over 100 ethanol plants and explaining to them what I think the splits and stuff should be. And they say, well, until we know the rules, we can't lock in anything. We don't know if there's going to be any money in this, let alone what the split would be, or let alone, you know, how big the pie would be that we're playing with. I say, that's fine. We'll go and get the farmers ready. We can get their scores. We can even go so far as to get them verified. And it's only $5. It is a risk for the farmer. It's a $5 risk. $5 is, I mean, things that we do in agriculture are way more risky than $5. Now, and I'm risking the most, right? My reputation, my whole company.
You're all in on it.
Stuff like,
you're all in.
We are. Nobody, I mean, we are all in. I'm so sold that this is where things are going, whether it be for 45Z or for other things. So I think you're exactly right. Our role here, farmer, you need to own your data. You need to know your scores, and the legitimacy of the data is what's going to create value. So we're helping you do that. We're dealing with a two-way marketplace here. We don't have the market today. Likely is going to be on January 1, because that's what the law says. So the market likely is coming soon, but it's not here today. So since we don't have the market, we got to develop the supply that when the demand is ready, we've got enough supply to actually create the market. And as I run the numbers for ethanol plants, most ethanol plants need 20 to 50% farmer participation to make this viable. Meaning, if you only have 5% of your bushels with low CI scores and 95% of your bushels with default scores,
29,
the weighted average, you don't get nothing. It's not worth it. And as I run these numbers for these ethanol guys, I say, man, like, look at what the data says right here. Here's the CI scores for your area. Here's your score today. You got to have volume to make this happen. They say, well, yeah, we know, but we don't know the rules yet. And so what we're coming in, we're saying, hey, we'll continue to help educate the farmers, get them ready, and get the data put together. But exactly to your point, then what we're going to end up having to build is then a price discovery tool for farmers to be able to shop around. And it's going to be, who's going to pay me the most for it? Is it a biofuel industry that's being propped up by 45Z and tax credits? Is it going to be the pork guy that figures out how to do low carbon sustainable pork? Is it going to be an export market that looks at this stuff? Is it going to be, other processing? No idea. Today, likely going to be in the biofuel space, but that's going to cause a major ripple effect that other folks are going to have to catch on, and already having those conversations in non-biofuel industries and non-row crop as well. But we need the scoring mechanisms to get there. But I mean, I think what it ends up being is I see where, in 12 months from now, these ethanol companies are going to be calling us saying, hey, we need 15 million bushels of corn with an average score of like 10 Can you do that? We're going to say, absolutely, no problem. And what we're then going to be able to do is if we need 10 million bushels with an average score of 10, we're going to get some of those bushels with an average score or with a score of negative 20, right? That really is going to pull it down. Blend that with some of the farmers that maybe are earlier into their journey, right? They don't have a great score today.
Yep.
Maybe they're at 20 and they're just getting started. So their score of 20, some of these guys are negative 20. Now we blend and we do weighted averages, and at the end of the day can deliver 10 million bushels with a score of plus 10 and be able to really help our biofuel friends to tap into these credits. And over time, you'll have more supply of low carbon bushels to move the needle further. Over time, folks with high carbon bushels, they're going to get squeezed out too, or the goalposts are going to continue to change. That over time, those poorer scores hurt more than they help. And a lot of those bushels are going to end up being redirected. But we're a long time from that. And I think a lot of farmers can be able to make some changes and lower their CI, their bushels. And like I said, a while back, the average score that we found today is an 11. It's pretty darn good.
Yeah, it's amazing. Yeah, it's fascinating. I hadn't thought about the price discovery piece as explicitly as you were talking about it. And effectively, you're talking about becoming a marketplace too.
Yeah, I think we're going to have to. I don't know who else is really going to do it. Not that we need to really try to wheel and deal and broker, but just somebody's got to bring the transparency to this as to, all right, in my neck of the woods, I've got 7 different market opportunities. Here's what each one is paying for my score, right? I think we're going to have it where I can plug in my score of a negative 4, right? And say I've got 20,000 bushels that I want to sell, and I've got a verified negative 4 score. And I'm going to be able to see what my cut as a farmer would actually be in these different markets. And then I can say, cool, I'll sell you, 10,000 bushels to this ethanol plant. Here I can click and share my data with them. Then when I deliver the bushels, they already have the data, right?
Yep.
So they don't just get all the data and I don't get paid there. I get paid upon delivery.
Yep.
Just like how the crop is done today.
Yep.
But I can, Continuum Ag can easily help to just push those scores and push the verification reports to these, we call it preferred partners, would be those folks that are on our price discovery tool. So we can basically bring lead generation to those preferred partners, bring them supply, have it all very consistent, legit, because it's been through verification, and make these connections to these folks, and then push the data to their software, right? We aren't necessarily the software for the ethanol plants. We anticipate we're going to have to potentially provide a little bit of that, but all these plants have their own systems, right? They all can do things their own way. That's great. Here's the CI score. Put it into your program. Love it. Let us know if you get audited, and we'll help to back things up.
It's so fascinating. I'm going to be really interested to see where the price discovery and the competitive marketplace leads in terms of split of the credit. That's going to be fascinating.
It's going to be really fascinating because these companies are going to have to compete, right?
Right.
I mean,
exactly.
They're going to be competing against each other is ultimately what this is, that there's a very low supply of low CI corn because nobody's talking about this stuff at scale, at least. We're pushing and we got a couple 100 million bushels, but we got a long way to go.
Yeah.
I don't know who else is really doing it. And I'm happy to, but I also we're a early stage company. We're growing crazy fast, but gosh darn, a lot of farmers need help here. So, we want to do as much of it as we possibly can. But somebody's got to help the farmers get this data pulled together. We're dealing with the IRS here. Not doing this right is literally tax fraud. So we have got to make sure that we are doing this to the nines, and it's going to take a lot of work. Hardly anybody knows about this, and we've only got less than 9 months until this thing starts. So we got to go.
Well, I think you've been going. More power to you and all the work that you're doing on this. Really, it's amazing. I appreciate it and respect it a ton. So as we wrap up, do you have any call to action for folks that are listening?
Any farmers, go to topsoil.ag and run your score. You can utilize our billion bushel challenge code BBC95 for getting that $500 score for just $25, because we would love for you to know your score, or any of the I'm sure you're going to have a lot of non-farmers listening to this. Any of you folks, you can play around with it too and see the data that we're collecting, go through some of that farmer process if you would like. biofuel folks or grain purchasers and stuff, you need to be looking at this, or food folks, you need to be looking at this. This is going to be very disruptive to your supply chains, but I think an opportunity that if you capitalize on this, you can make some serious money in this. You can really do some good for the world in this. You can do some good for regenerative ag in these programs. And if you're not paying attention, you might be disrupted at the beginning, though. Might have a little pain at the beginning, but if you're paying attention and you get on this, I think there's huge opportunity here. And again, I'm super bullish that we're going to be documenting our farm practices on every acre of agricultural land, running not only carbon outcomes based on those practices, but water quality, biodiversity, and other sustainability outcomes. Like, this is just the way the world is going. Like, it just makes so much sense to me to document, run the environmental outcomes. It's got to be verified. It's got to be legit. We're doing real stuff here. But then that data goes with that product to create claims in the supply chain. So really excited for those opportunities there for farmers to tell their story and go from being part of the problem, which we absolutely are today, right? Agriculture is part of the problem today. That is a fact. But we are doing a good job in reducing our impact and can really be a huge piece of the solution. And now there's some data to be able to back that up, and real opportunity coming to fruition.
Yeah, exciting things in the mix. Thanks a lot, Mitchell. Really appreciate it.
Appreciate the time. Thanks for having me.
Thanks for listening to this episode of The Business of Soil Health. Our goal is to explore how new financial tools may or may not support producers' stewardship of their soil. We love hearing from listeners, so don't hesitate to reach out with any suggestions or guests you'd like for us to feature. And don't forget to subscribe or leave a review on your favorite podcast platform.